Welcome to the deep dive. We're jumping straight in today, looking at Visa's latest results, fiscal Q4, and the full year 2025, plus their crucial guidance for 2026.
Yeah, lots to cover.
Our goal, give you the real story behind the numbers, fast. What's their health? Where are they heading?
And to do that, you really have to start with the non-GAAP numbers. Those give you the clearest picture of the core business, stripping out, those one-off items.
Got it. So Q4 2025, what are the headlines?
Okay, net revenue hit $10.7 billion. That's up 12% year over year.
And adjusting for currency, constant dollar.
Right, on a constant dollar basis, it was 11% growth. And the non-GAAP EPS, earnings per share, that came in at $2.98. Also strong, up 10%.
Okay, solid quarter. What about the full picture, fiscal year 2025?
Even stronger, really shows the momentum. Net revenue for the year was $40 billion. That's up 11%.
And constant dollar?
12% on a constant dollar basis. And the non-GAAP EPS for the full year, $11.47. That's a 14% jump from the previous year.
So that constant dollar thing, just quickly, that basically takes out the impact of, say, the dollar getting stronger or weaker against other currencies.
Exactly. It lets you see the growth from the actual business operations, not just currency fluctuations. And non-GAAP, again, just means they've adjusted out certain items, often big one-offs, which we'll definitely get into later.
Right. The CEO talks about a durable, diverse business model. These numbers seem to back that up.
I think so. That consistent double-digit growth, especially constant dollar, suggests it's more than just, riding an economic wave. It points to them capturing more digital payments, more cross-border activity.
Okay, that sets the scene for the past year. But markets always look forward. What's the guidance for fiscal 2026?
This is key. They gave non-GAAP adjusted constant dollar guidance. It's a mouthful.
Yeah, sounds very official. What does that mean for us trying to figure out what they actually expect? Why all the adjustments?
Well, it means they're trying to give a forecast based purely on the core operating business. They're taking out accounting adjustments, non-GAAP, currency volatility, constant dollar, and other specific internal adjustments. It's their cleanest look at the engine's power, so to speak.
All right, makes sense. So what is that super clean forecast predicting for FY26?
Continued solid growth. They're projecting low double-digit growth pretty much across the board.
Yeah.
Net revenue, operating expenses, and that diluted Class A EPS all expect in the low double digits.
Low double digits. For a company this massive, that's still pretty good. But, they just posted 14% EPS growth for 25. Does low double digits feel a bit cautious?
It often does, yeah. Guidance tends to be conservative, especially with global uncertainty. Visa often beats these initial forecasts. And look at their Q1 2026 guidance specifically.
What's that say?
For Q1, they're actually guiding net revenue growth at the high end of low double digits and EPS growth in the low teens.
Okay. So maybe starting the year strong, even if the full year target has some wiggle room loop in.
Seems that way. Suggests confidence coming out of the gate for the new fiscal year.
So where's this growth actually coming from? Let's get into the specifics, the drivers.
Right, the engine room. It's pretty broad. If you look at Q4 25 drivers, payments volume, the total dollar amount spent on cards was up 9% year over year, constant dollar.
Okay.
But processed transactions, the actual number of times cards were used, was up 10%. Reached 67.7 billion transactions just in Q4.
Hold on, transactions up 10%, but volume up 9%. Does that mean people are using their cards more often, but for smaller amounts?
That's exactly what it suggests.
Yeah.
Smaller average ticket size.
Right.
Big, more taps for coffee, small online purchases, subscriptions. It's a good sign for Visa, though.
How so?
Because they generally earn a fee per transaction, regardless of the size. So higher transaction counts mean deeper integration into everyday spending habits. It's becoming like a utility.
Makes sense. What about international? That's usually a high margin area.
Huge. Total cross-border volume was up 12%. And the really key metric for their international transaction revenues, cross-border volume, excluding transactions within Europe, that was up 11%.
So travel's back, international e-commerce is strong.
Absolutely. It's a major tailwind for them.
And looking at the revenue breakdown, data processing revenue up 17% to $5.4 billion in Q4. That's big.
Very big. Shows the scale of their network processing power.
But the one that really jumped out percentage-wise was other revenue, up 21% to $1.2 billion. What's in there?
That's mostly their value-added services. Things like fraud prevention tools, data analytics, consulting for banks and merchants. That 21% growth is really significant for their strategy.
We should definitely circle back to that when we talk strategy. Okay, so Strong operational growth across the board, which makes this next part confusing. Why did the official GAAP net income fall by 4% in Q4?
Right, this is the crucial GAAP versus non-GAAP difference we mentioned. The reported GAAP net income did decrease slightly from $5.3 billion to $5.1 billion.
Despite all that good operational news, how?
It was almost entirely due to one major factor, a large litigation provision, a non-recurring charge.
Legal costs. How big was this provision?
It was substantial. In
Oh.
Q4 alone, they set aside $899 million. This relates primarily to that big interchange multi-district litigation, the MDL case, and some other legal matters.
That MDL case, that's the long-running dispute with merchants over swipe fees, basically.
That's the one. It's been going on for years. Companies like Visa have to account for potential settlements or judgments. And for the full fiscal year 2025, these provisions totaled $2.5 billion.
Wow. So that explains the GAAP dip. The underlying business profit, the non-GAAP number, was actually up.
Correct. The non-GAAP net income for Q4 was $5.8 billion, which was up 7% year over year. That reflects the actual business performance stripped of that large legal charge.
Okay, that makes sense. There was also something about a deposit into an escrow account, $500 million?
Yes, in September 2025, they put $500 million into a litigation escrow account. This is part of their plan, the U.S. Retrospective Responsibility Plan to fund potential future payouts related to these legal cases.
So practically speaking, that's cash set aside, not available for other things like buybacks or immediate operations.
Exactly. It's earmarked for potential legal settlements down the road. It reduces immediately available capital, similar in effect, though not technically the same, as a buyback taking cash off the balance sheet.
Got it. So the core business is humming, but legal overhangs are impacting the official bottom line. Let's shift to strategy then. What's the CEO, Ryan McInerney, saying about the future direction?
He's really focused on investment and transforming Visa. He talked a lot about building out the Visa as a service.
SASE as a service. Okay.
And he used a very specific phrase, aiming to be a hyperscaler across the payments ecosystem.
Hyperscaler, like Amazon Web Services or Microsoft Azure, but for payments. That's ambitious.
It is. It signals they see themselves as fundamental infrastructure, not just a card network. And remember that 21% growth in other revenue.
The value-added services?
Exactly. That's the evidence. They're selling tools built on their network, sophisticated tokenization for security, AI-driven fraud scoring, data insights consulting. They're monetizing the intelligence from the network, not just the transaction itself.
So the strategy is layered, process the payment, but also sell services around security, data, and efficiency based on that processing.
Precisely. And McInerney specifically mentioned positioning Visa to lead where new technologies converge, things like AI-driven commerce, real-time money movement, more tokenization, even stablecoins.
They want to be the pipes and the brain, no matter how money moves in the future.
That seems to be the goal. Investing heavily to stay central, whether it's traditional rails, real-time systems, or even blockchain-based payments.
Okay, very interesting strategic framing. Let's talk shareholder returns. Good operating results usually mean good things for investors, right?
Definitely, and they showed that. The board approved a 14% increase in the quarterly cash dividend. It's now 6.67 cents per share.
A 14% hike is pretty significant, signals a lot of confidence in future cash flow.
It really does. And they kept up the share buybacks, too. In Q4, they bought back about 14 million shares for $4.9 billion.
And for the full year?
Full year repurchase was $18.2 billion. And they still have about $24.9 billion authorized for future buybacks.
So returning a ton of cash to shareholders via dividends and buybacks, clearly they think their stock is a good investment.
That's the signal, yes. Yeah. One other capital item, kind of technical, was related to the Visa Europe acquisition back in 2016.
What was that?
They finalized the release of about $1.4 billion in value tied to some preferred stock, Series B and C. That was part of that deal.
So just cleaning up old acquisition accounting, does it change the number of shares outstanding or anything like that?
No, essentially it just settles that final piece of the Visa Europe deal structure, tidies up the balance sheet, closes that chapter, but doesn't really affect the current diluted share count for investors. It's more of a historical footnote being closed.
Okay, good to clarify. So let's wrap this up. Key takeaways.
Let's say robust double-digit non-GAAP growth, really driven by international volumes and those value-added services. Strong guidance for 2026, though maybe a tad conservative.
And definitely need to understand that big litigation hit to make sense of the GAAP numbers.
Absolutely crucial. And maybe the biggest takeaway is the strategic shift. The CEO isn't just talking payments. He's talking AI, real-time stablecoins, positioning Visa as this core infrastructure player, this hyperscaler.
Which leads us to a final thought for you, our listener. With Visa investing so heavily in tech and branding itself as a hyperscaler, what does that really mean for its future? Is it becoming just a faster, smarter utility for moving money? Or is it aiming to be something more, a fundamental, integrated ecosystem that underpins the entire next wave of digital commerce? Something to think about.